Hi, I'm Pattu from freefincal, and in this video, let's talk about when should we rebalance our portfolio, plus an FAQ on portfolio rebalancing. Portfolio rebalancing is a very simple task, but I don't know why so many investors are extremely confused about it. I'm not sure how much this is going to help, but let's get into it anyway. So the whole idea is quite simple. So suppose you start with a 50% equity, 50% fixed income portfolio, and after a year or so, your equity has become 57% or 60%. Then you have to remove that excess equity of 7% or 10%, and then buy fixed income with it. Or if the opposite happens, then you have to remove fixed income and invest in equity. So the essential idea of portfolio rebalancing is to take out money from an asset class that has done well and put it into an asset class that has either not done well or not done as well as the other asset class. So this is the basic idea. Rebalancing is necessary for peace of mind. For example, if you find that in 2017, I think equity markets gave very good returns. Some of the small caps, mid cap funds gave fantastic returns. And at the end of that year, if you look back at your portfolio, you would have got 30-40% returns in your small cap and mid caps. That was the time you should have booked profit. But what happens is people get greedy and say, let me get some more, and then wait for some time and then it will start falling. So primarily for peace of mind, secondarily if you a quantitative reason is that I have shown it several times before and I will show it again now. It reduces portfolio risk. Sometimes if you're lucky, it can give you extra returns as well. Now in this article, when to rebalance the portfolio, there are multiple links on past posts on rebalancing, how to rebalance, why to rebalance, and so on. You can take a look at that. So can I rebalance the portfolio by only adjusting the investment amount? This is a newbie question. People who don't have much of a net worth ask this question, but that's not going to be possible for too long. Once the amount you have already invested becomes much more than the amount that you are actually investing per month, then you will not be able to adjust the asset allocation by adjusting the investment amounts. Now another problem is people are always asking for solved examples of how to rebalance a portfolio. This I don't understand. I mean, this makes me really annoyed. I don't know what to, I mean, I don't see what is the big deal to explain. Anyway, so suppose you are investing 1,000 rupees in a Sensex fund and 1,000 rupees in a gilt mutual fund. Your asset allocation is 50-50. After 1 year, the equity allocation becomes 9,000 rupees and the gilt allocation becomes 12,500. So the equity exposure is now 42%. So if you want to rebalance, you have to increase the equity exposure to 50%. So 50% of 9,000 plus 12,500 is 10,750. This means you have to take 1,250 rupees from your gilt fund and put it into equity. That is all. What is the big deal in this? I don't understand. I don't know why so many people are asking me for solved examples. This is just, it just freaks me out. Should I rebalance within an asset class? Yes. If you are holding large cap stocks, or if you are holding mid cap stocks, or if you are holding Nifty 50 and Nifty Next 50, definitely you should do a rebalancing among the equity mutual funds so that you have the similar risk management benefit. Another problem is that people have multiple equity funds and they want to know what should I book profit from. What should I do? Should I book profit from the best performing fund or the worst performing fund? To be honest, it really doesn't matter because you're actually going to look at it as an asset allocation level. But you can combine both rebalancing within an asset class and rebalancing from equity to fixed income by choosing the fund so that the balance between large cap and mid cap is maintained, the balance between equity and fixed income is maintained. When should you rebalance the portfolio? So this is the primary question that we shall answer in this article. We can rebalance, we can say I'm never going to rebalance, that's not beneficial. We can rebalance once a year, we will call it a systematic rebalancing. we will call it, we will then define what is known as trigger rebalancing. That is, if the portfolio deviates by 5%. So if 50% equity portfolio becomes more than 55% or less than 45%, we can do a rebalance. That's called 5% trigger rebalancing. We can also do a 10% trigger rebalancing, where if the 50% equity portfolio becomes more than 60% or less than 40%, we do a rebalance. That's also called a 10% trigger rebalancing. So finally, there is also a tactical rebalancing based on moving averages, PE, and so on. We will not consider tactical rebalancing, tactical asset allocation in this article. We will only do systematic asset allocation, or sorry, systematic rebalancing and trigger rebalancing. Sorry. So we are going to do a back test with Sensex and IBEX Gilt Index Fund, and there are 95 15-year rolling windows. So from August 1997 to August 2013 is the first window. The last window is June 2005 to June 2020. So every graph that you are going to see will have 95 data points in that. I want to point out that we are not looking at goal-based portfolios. We are just looking at a general portfolio. In a proper goal-based portfolio, the equity allocation has to be reduced with time, and that has to be taken into account. And that's essentially the topic of my lectures on goal-based investing in my exclusive Facebook group. So now we are going to compare the no rebalancing portfolio, that is a portfolio with absolutely no rebalancing, and a portfolio with systematic rebalancing, by starting with 50% Sensex and 50% Gilts. You can see that most of the time the systematic rebalancing has actually got a better return, which is amusing because that has extra benefit, but it works now. Now this is a comparison of systematic rebalancing. The pink line, if you are not able to see the graphs, let me just make this here. So the pink line here is systematic rebalancing. The blue line is 5% trigger rebalancing. Sometimes systematic wins, sometimes 5% trigger wins. Then we have the 10% trigger. So the pink line is the systematic rebalancing. The green line is the 10% trigger rebalancing. Again, sometimes 10% wins, sometimes systematic wins. So if you compare the XIRR, out of all the 95 runs, 69% of the runs, the systematic got a better XIRR than the portfolio where we did not rebalance. 5% trigger, all the runs compared to the unrebalanced portfolio, the 5% trigger did better, and 98% of the runs, 10% trigger did better. So clearly you must rebalance your portfolio, and for 50% asset allocation, the 5% 10% trigger has done better than the systematic. And what you see in this graph, so these are the maximum drawdowns for each of the 15% runs. Maximum drawdown means from a peak, how much the portfolio has fallen the most. The maximum fall from a peak is called maximum drawdown, and you can see that the portfolio without rebalancing has got significantly big losses, 35% loss, 30% loss, and so on. Whereas the losses for a rebalanced portfolio, whether it is systematic or trigger, has been significantly lower, and this is the primary reason why you should rebalance. You are minimizing your losses. And there are other metrics. I don't want to get into all that, too many things, but the most important aspect is that when you rebalance, you are going to pay tax and you are going to pay exit loads. So when you do systematic rebalancing for 15-year duration, you will do 15 rebalancing events. There you will do rebalancing 15 times. When you do 5% trigger rebalancing, the rebalancing becomes more. It becomes 19 to 20 times typically. But if you do 10% trigger rebalancing, the rebalancing dramatically drops to only 5 or 6%. So for a 50% equity portfolio, clearly the 10% trigger rebalancing has done very well. Now, I have got data for 60% equity and 40% debt also, and so I have similar data. And in this data, systematic rebalancing is the winner, because what happens is that the XIRR for systematic rebalancing actually beats the unrebalanced portfolio a lot many times than the other trigger rebalanced portfolio. And also for 70% 30% equity, you can see the details. Again, the winner is systematic rebalancing. So the thumb rule is that for 50-50, trigger rebalancing will work, but if you increase the allocation of equity in your portfolio, then it is much simpler for you, better for you not to do trigger rebalancing, but to do a systematic rebalancing. Even within the systematic rebalancing, some people have a question: which month should I do a rebalancing? Should I rebalance in January or June or December? Well, within that year, if you see one time when the market has moved up a lot, then immediately do a rebalance. In 2017, I rebalanced for my child's education goal twice a year. So it's up to you how you want to play it. So please look at the our full article and get back to me if you have any questions. Thank you. Bye bye.